Hello, everybody. Welcome. I am very excited today about this webinar because cybersecurity insurance and cybersecurity are such a huge concern for our clients and our prospects. One of the reasons we are doing this webinar is because we are finding that the number of cyber incidents keeps rising. However, the number of businesses getting insurance is not increasing, and the number of companies who have cybersecurity insurance coverage are not reevaluating their coverage to determine if they should increase it or not. So today's topics we are going to cover are what technology standards you need to have in place to get the best premium rate, and why cybersecurity insurance is such a vital tool for your organization, and working with an advisor through the entire process. So my name is Julia Dian. I will be your moderator for the webinar today. And before we begin, I would like to remind you as audience members that you will be muted throughout the whole thing. However, we love to hear questions, comments, and feedback. So please use the Q&A feature at the top of your screen to ask questions. I will take your questions and ask them to the speakers throughout. And we also have additional time saved at the end to get to more of your questions. So moving on, I would like to introduce you to today's speakers. Today, we are fortunate to have with us Jason Gotway and Chris Schroeder. Jason is a principal and director of our Anders technology team. Jason started his journey with cybersecurity insurance or cybersecurity soon after he first started working for Anders 16 years ago. Jason was directly responsible of making sure Anders was safe from attacks. When Anders purchased the first dedicated cybersecurity appliance with a threat intelligence monitor, it gave him the training he needed on different types of attacks. A couple years later, Jason took that experience and brought that same education and attention to our clients. Our second speaker is Chris Schroeder. Chris is a wealth advisor for Claris Advisors, an affiliate of Anders. Chris has over 25 years of wealth management and advisory experience. He began his journey a few years ago in cybersecurity insurance when he realized how big of an issue cybersecurity was for all of his clients. Chris is my go-to person whenever I have questions or my clients have questions around cybersecurity insurance. So Jason and Chris have some great content to share with you today, covering why you should have cyber insurance, information you should have prepared when starting or renewing a policy, security standards you should have in place, and the experience of working with an insurance advisor. So just as one more reminder, this webinar will be recorded and we welcome questions and comments. So please, again, use that Q&A feature in the top right corner and put your questions in there. So at this time, I would like to welcome Jason Gotway.
Hey, thank you, Julie. Also, Anders is doing Hoops for Hope right now. So for the first 3 attendees, if you'd like to fill out a bracket, they're on me. Marketing, if you could find out who those first 3 were, and they want to go out to anderscpa.com and fill out a bracket, go for it. And a little bit of advice, if you look back at the last 20 NCAA champions, I think almost all of them are on the East Coast, maybe except Baylor and Kansas. That's my bit of advice. Good luck. Again, my name is Jason Gotway. Thank you for the introduction, Julie. The answer to the question, is it worth it? Based on my experience, yeah, if you have a computer in the office, it's absolutely worth it. If you can see on this chart from IBM, if you have a server closet or you have, you're using public cloud resources like AWS from Amazon or Azure, or you have a combination of both of their services, incidents can happen anywhere. Or a combination of cloud and on-premise workloads that can happen anywhere, and assurance is applicable to all of those. So kind of unfortunately and fortunately in my line of work, I'm very well versed. Organizations kind of call me out of the blue and say, hey, I've had a ransomware attack. I need help. I don't know what to do. So learning a lot from those experiences, and then on the unfortunate side, a lot of businesses and organizations, that's the worst day of their life because they've it's on the table that they may lose everything. So in this next slide, I'll share some of the examples with you that I went through that really maybe the most important slide here. and that is because these are the real world incidents that happened last year where I'm bringing them out as examples of companies that were underinsured. So the one in April, they had a $25,000 policy that briefly mentioned cyber, and the actual cost. I mean, I know my invoice that goes to a client after the fact of how many hours and remediation and everything it took to get the hacker out of the environment, but also all of the things that go back into getting production functioning again, and all the security functions that are put in place, perhaps that weren't in place before the attack. Getting all that done, the team that comes in and makes all that happen in shortest amount of time possible, working around the clock. Those add up really quick to where $25,000 is not going to be adequate for a modern cybersecurity incident. And then after you add on, if you have a bad incident and attorneys are involved and breach coaches and additional companies that come in as part of your insurance recommendations, maybe they're not covered, but maybe recommendations, that the actual cost can go way up after all things are considered. The second one was a little bit lesser coverage, but on both these cases, they opted not to pay the ransom, and Chris will get into that in a little bit about first-party, third-party coverage, about what's the difference between getting my organization back online and then what's covered from a kind of a third-party perspective. So on both of these cases, the organizations, opted not to pay the ransom, and right afterward, they updated their systems. I think one thing that's unique about these two incidents was both of them were firewall misconfigurations. The normal vector for attack is email, a phishing email or something along the lines of it, an email coming in with something malicious, and that causing an incident after somebody clicking on something they shouldn't. But in this case, it wasn't the case on either of those top two. And then the third one, this is the most common attack, is a business email compromise. Many of these can be prevented by just having multi-factor authentication. This company was adequately insured at $1 million, and the cost of the business email compromise is relatively small in comparison to ransomware. It was only $8,000. So I think it's worth mentioning, and some of the organizations that you do business with, or they're one of your vendors. I recently finished up our customer service agreement. So before we do work for a client, we have a typical agreement that you would expect with a technology service provider. And in that, our attorneys suggest that everybody that we do business with have at least $1 million in coverage. But now it's like in bold letters. I think it might have been there before, but now it's in very, very bold letters, that this is pretty well a requirement nowadays. In the next slide, some of those pieces that you're kind of going to expect whenever you're seeking cybersecurity insurance is going to be because of these risks, and then beyond it, there's some control. So I'll explain as best I can, kind of what's going on in the risks, and then the control aspect. So email imposters. This is from Lockton, by the way. They have some, and I took the ones that I felt were most important, that I see most often in the wild, and shared them in this slide. So email imposters, business email compromise. So whenever an organization has a mailbox, perhaps it doesn't have multi-factor authentication enabled on it, and a hacker is able to sign into that email account by whatever method, they're kind of intercepting the mailbox and can send and set up rules and all kinds of bad stuff. Basically, whatever it comes up in their imagination, they can do, once they have access to an email inbox. The second one, ransomware. Obviously, you hear about this a lot in the news. The oil pipeline on the East Coast, the meatpacking company that kind of may have affected your life in some way by fuel costs or price of meat. Definitely something that you hear about on a regular basis now. Also, on the corrupted software files on the next bullet there, if you remember back, there was this company called SolarWinds, and they do a lot of work for the government. I think out of a few hundred clients that Anders Technology has, there was one or two clients that used SolarWinds, very good technology product. But whenever a hacker gets into a supply chain attack, they're looking for a fast way to reach as many organizations as possible. So if they plant malware inside, one of SolarWinds updates, then they've accomplished that feat. So that's one example of a supply chain attack, a more recent one. And denial of service attacks. So part of my responsibility, working in cybersecurity, is I get intelligence fed to me all day long via podcast, Twitter, alerts popping up, emails, and based on world events right now, it's kind of involved with the news as well. So if you're watching the news, I would say cybersecurity is mentioned a couple times per hour. And one thing you may hear now is called denial of service attacks. So basically a hacker, in this case, spreads malware out to maybe 1,000 computers, maybe through phishing. And then whenever they want to set up all those computers that they've attacked in a focused effort to a single address, then they will focus all of the computers, point it at one address, kind of flood it, and knock down a website or a service that's running in a denial of service. And whenever the server that's handling the address can't handle it anymore, then the website goes down. But this is one that's probably going to have more attention. And I saw one of these last week, actually, at a not-for-profit. It's the first one that I've seen in a while reported to me, but I've been seeing it in the news a lot more often. The next one's a phishing attack, kind of that I mentioned earlier. So basically, malicious content in an email coming into your inbox and clicking on it is something we obviously want to avoid. A very, very common attack vector. Securing network devices is a very important bullet. We want everyone to have encrypted hard drives on their laptop. So, if a hacker gets a hold of a laptop, they can't pull the hard drive out and plug it in and take data off of it. There are laws on in each individual state about what has to be reported in a breach. Should a laptop be stolen or lost. BitLocker is a very common product used to encrypt hard drives nowadays through Microsoft Intune that can be managed. Securing wireless net. This is an important one. I think wireless, we think of it in such a manner where, yeah, everybody's got wireless. But one weird thing about wireless is you can be, normally wireless networks can be accessed outside, the brick and mortar of a building. So we really want to share with everyone, don't post corporate Wi-Fi passwords publicly, like in a conference room or on the front desk or something like that, where someone could use it in a malicious manner, even after hours and the doors are closed, and still get and have access to company resources. We really want securing wireless networks to be attached to, employees' network credentials. So whenever they, perhaps are terminated for whatever reason, the account's terminated, they no longer have access to wireless networks, and guest networks to be separated from corporate wireless. So these are kind of the reasoning. All of those bullets are kind of the reasoning behind what you'll see on insurance attestations or requirements or questions from an insurance agent as to why they're going down this path where they're not going to provide coverage. They're not going to have a policy for organizations that don't take these risks into consideration. It was kind of the Wild West for a while, where organizations, they may get ransomware and they may want to pay the ransom, and the insurance company would take care of all of it. And now, fast forward a few years, they're like, whoa, what were you doing for your cybersecurity, or what are you doing now so we can cover you in the future? So on the attestations that I see on the control side, I've did a lot of these. So the ones that I see most often is multi-factor authentication is treated as king. So I think on the last one I reviewed was a traveler's insurance attestation, and there were 4 questions. Every one of them were related to multi-factor authentication. So I think it's almost a guarantee that you will see that question on your next cyber policy. The next one is patch management. So, if you have a few computers in your organization, you might be able to set it to automatic updates. So whenever, Windows has an update or your Apple computer has an update, that it automatically downloads. Whenever you start getting more and more computers, they're maybe a little harder to manage. Then you may need software or a technology service provider to provide that patch management that makes sure all of your machines are getting updates, and also get a report on it that says all of these computers are updating, or this one's missing an update, to really remove the vulnerabilities that may exist on the operating systems. So speaking of operating systems, I moved this bullet around from the source of locked-in, but the replacing unsupported software, Windows 7, not getting Windows updates anymore. Windows XP, it's not getting updates anymore. Those are the machines that have to be removed from the environment. You may receive questions on that as well on an attestation. We cannot have those machines in there because there are vulnerabilities on those that may not be patched. Frequent backups. I'll share with you a story, and it's related to that last slide. One of the organizations got ransomware. The organization not only had their production environment get ransomware and nothing was useful anymore, but they also encrypted the backup. So they literally had nothing. I think they did have one hard drive that may have been 6 or 7 months old that had some content on it that allowed them to restore some files, but obviously they were over 6 months old. So just having backups is great, but also you need a copy that like a hacker does not have access to. So if it's unplugged from the network and a hacker can't reach it to encrypt those files as well, then the mission is accomplished. Yesterday I was on the phone with an insurance agent, and he asked me about does the organization have a spam filter, and I said yes. Email authentication was one that was not asked, but I will share this one with you for kind of a different reason. Email, like multi-factor authentication, is great, but the reason that I really suggest that a Microsoft certified professional do email authentication is because many engineers can set up multi-factor authentication on your email or your VPN access, excuse me, but there are loopholes in there. So if an organization has some employees have an older iPhone that need to do legacy authentication or other devices that they want to have email on, that legacy authentication aspect allows a hacker to go right around multi-factor authentication and not be used. But those little pieces, may not be recognizable or may not be known about unless you went through some Microsoft training. Other email authentication techniques, kind of prevent spoofing. We don't want anyone sending emails on your behalf that you didn't want, or a lot of spam coming through. In email authentication, we want to verify that is you, the sender, and again, that takes an experienced technology professional with some experience in cloud to make sure that's accomplished. Because the last thing you want is saying, yes, we have multi-factor authentication on everything, but then you learned about this one loophole and perhaps getting denied coverage would not be good. And then remote desktop protocol, this one is going to be asked more frequently in thorough attestations. And that is a very common protocol that has become increasingly more vulnerable to where you can't use it at all. Now you can't expose it to the internet. And whenever I say expose, I mean if a hacker goes out and finds an open port just by scanning the whole internet automatically, and they find this RDP port open, then it prompts them with credentials. so they can enter a username and password that they found from a previous hack or previous breach or guessing, and they can log in. That's why that's such a horrible protocol to leave open on a network. And restricting administrative privileges. This one's growing larger and larger. And I'll use myself as an example. And Julie mentioned at the beginning of the presentation that I used to have the responsibility of maintaining Anders infrastructure and production and cybersecurity. And whenever I made that change to start supporting clients, I didn't need all the rights and permissions and all the access to things that allowed me to take care of Anders. So I got together with the internal crew who was kind of taking over my responsibilities, and I said, we have to take away all my network drives, take away everything that really I have access to that I don't need anymore. Because in the event that my account was compromised, then a hacker would have all of that, and it would be completely unnecessary. So using myself as an example, I went through that process and took away everything that I didn't need. And I asked, organizations that was like, do employees have access to everything? Is the folder set up that everyone has access to every file in the organization? Because whenever a hacker gets into an environment, it's immediately figuring out, how do I become an administrator to do all the things that I want to do? And the last hack that I saw, they did it was 2 hackers attacking one network, and they did it in 38 seconds and escalated the privileges. And whenever something moves that fast and they don't even set off any alarms or triggers for anything, the restricting administrative privileges gives extra time to prevent a hacker from traipsing to the network as fast as they want. On the next slide, I'm going to reiterate multi-factor authentication, only because you're going to see it on every single attestation, I would think at this point. So multi-factor authentication, I'm a terrible hacker. I can't cover my tracks, and I'm not going to hack anybody. I signed a bunch of papers that said I wouldn't do that. So many of your passwords have already been hacked, and like LinkedIn, if you have LinkedIn or you have Yahoo Mail or Equifax, you get the list. It goes on and on. All of these organizations have been hacked. So what they did during the course of a lot of these hacks is they captured a password that you were using, and they can try to reuse that everybody reuses passwords. I think I don't anymore after I got a password manager. Then I encourage you to use one of those. But after you have reused a password a couple of times, a hacker knows that, and they're going to try to use that to authenticate to different places. And some of those passwords that have been hacked, you can find on the dark web. We have a tool that scans the dark web for email addresses and whatnot to find out if your password's out there. So what I did is I punched in my own email address, and you'll find my password out there from SIUE in 2006 or 2002. 5ML4H2S. That was my password in college for my email, and it was hacked. And okay, now one of my passwords is out there. You get the point. So if a hacker wanted to try that on my LinkedIn or on my network account or anything like that, it certainly could. But if you have multi-factor authentication, it reduces that, according to the Department of Homeland Security, by about 99%. So really encourage multi-factor authentication. The insurance companies are justified in asking for that. On the next slide, this one's a question to get a lot. Well, how much coverage do I need to cover my environment? I don't have, some organizations say I don't have anything valuable. But if you go out here and use one of these, I think there are actually supposed to be 3 bullets here. I only put 2. But the third one is Christopher. He's going to pop in at the end and go over the insurance aspects. But Evolve Mega, I have no affiliation with these organizations. I just think they have great calculators. So Evolve Mega is one where you can go out and punch in maybe, how many PCI records you have or health records, and you can put those in and answer some of the other questions on there. Pretty easy questions. And it can kind of tell you, I would say it's more of a ballpark on how much coverage they're suggesting, but it's something kind of give you an idea of the range of coverage you would need. However, asterisks, I would go through that thoroughly with a person like Christopher and find out what your true needs are. But these are something, if you don't want to interact with anybody yet, you can certainly go out these coverage calculators. And I can tell you, even without even without any records being exposed, it still costs money. Disruptions in productivity, all those things cost money. So I would encourage you to think about it for a long time about the coverage you would need. Disruptions to business, attorneys, what I mentioned at the beginning of the presentation about a person like me or our team helping you get back to normal. On the next slide, the insurance attestations, a little bit deeper on those. They're going to ask you on an attestation for multi-factor authentication on anything that's really a cloud service, anything that's email, remote access that's granted to not just employees here, but also contractors you have and third parties. Now, if you remember a few years ago, I think it's how Target got hacked. It's through a third party. It might have been an HVAC vendor if I remember right. And also on this last one, this is going to annoy the IT guy, but anything that has administrative privileges like firewalls, servers, backups, they're going to start having to be punching in a multi-factor authentication code just to ask for access on a server on the same network. So this is definitely on travelers insurance. I saw it on their attestation. So be prepared. There might be projects that you have to do to make sure all of your servers are prompting for multi-factor multi-factor authentication. And through me providing information on attestation and the risks and the controls and kind of what to expect and when you need cybersecurity insurance, sometimes on a cybersecurity incident, I need to go a step further because it's inquired with me that, hey, what do you have to provide cybersecurity insurance? Who can I turn to? And we want to use the best, and under our same roof is Claris, and that's Chris Schrader. And sometimes I'll involve Chris and be like, all right, this is where we're at. This is what we've done from the cybersecurity perspective. They're inquiring about insurance, and I trust Chris, to have a high level of customer service to line them up with the right people, in true Andrew style, the great customer service, to make sure that it's handled after I leave off with an environment that's back up and running, and the appropriate cybersecurity insurance is addressed. So, Chris, I will turn it over to you for you to get started where I leave off, just like we do normally.
Okay. Well, first of all, I want to thank everybody joining us on this beautiful spring day and listening to cyber insurance and myself. I know it'll be trying, but we'll get some good information out here and get you back out into the sunshine. So cyber insurance is something that we've obviously been talking to our clients about more frequently over the past couple of years than when I actually started in the insurance business. I mean, cyber policies were around in the 1990s. They pretty much covered online media and data processing errors for clients. In the 2000s, they evolved. Lloyd's of London came out with really the precursor to how policies look today. And that included first party and third party coverage. And I have a slide that will address that. And Jason had mentioned that earlier. It also they've evolved now to the current form where you have business interruption. So just the absolute time that you're down, there's a cost for your business being down if you have an incident. There could be some fines if you're in a particular healthcare providers. If there's an issue there can be regulatory fines at a state or local or one of the other agencies that monitors the business that you're in. There can be credit monitoring for clients impacted. I've had that done through the Equifax breach a number of years ago. There's potentially public relation costs. There's regulatory risk and some of the other things that we have to think about or deal with as business owners. And then there's the actual cost of restoration. So having some experts come in and get you up and running and then restore maybe what was lost or corrupted in that fashion. So, you know, I always say not all policies are created equal. They really are written to fit, you know, the type of risk that you're wanting to cover. You know, you're not actually purchasing this from some of the well-known TV commercials. You're going to large insurance companies that have expertise, and I'll touch on that in a little bit. And the folks that we work with, the partners that I work with, have deep expertise in this as well. So we're able to provide a solution that is based upon your needs, and then really that's how premiums are then derived, the type of liability, what you're trying to cover. So premiums are all over the board. That's the other question I get a lot. What's it going to cost me, Chris? And the answer to that, which all of us don't like to hear, is, well, it depends. So there's a process to work through that and to help so that you can make a better decision. Okay, make a better decision on how much you want to insure and how much you want to, you know, transfer that risk over to an insurance company. So traditional property and casualty policies simply aren't designed to cover the types of losses we're seeing. I've read statistics, and these statistics are all over the map, but you know, they said that worldwide spending on cybersecurity is going to reach 133.7 billion in 2022, and this is an article from, I think, 2021, 2020. The average time to even realize sometimes there's been a breach can be as much as 7 months. So there's quite a delay in that, even realizing maybe something has happened, and that's something to think about. 71% of these breaches were financially motivated, and the other 25% were motivated by espionage. And for the math majors out there, that leaves 4%. I put that in the other category. So pick one, and there you go. Something that we also want to think about is, you know, what are the statistics around, you know, what's the most predominant way that people have a loss? Well, you know, roughly 52% are due to just good old-fashioned hacking. And we know it's not Jason. He said he wasn't very good at doing that, so you're off the hook. 28% is malware, and 32 to 33% are the phishing, the social engineering. If you're a large enough company, you have these vignettes that you take every year to make sure that, you know, you understand, think before you click, and those types of things. Because the majority of the time, it is something an employee internally or one of us does something innocently, and, you know, boy, then all of a sudden somebody's inside of our systems, and we could have a problem if we don't have the right systems in place. So that's something to think about. So we think about the insurance market as a whole, some trends. I'll touch on these to start with. Go ahead and go to the next slide. So sometimes you hear folks like myself or your insurance professionals talk about there's a hardening of the market. And like anything, insurance markets are soft, or there's a hardening of the market. You know, a lot of times when we hear that, you know, there are some things that come out. We might be experiencing premium increases, okay, across the board. That could be due to losses. Underwriting guidelines tighten, or they change. A good example of that, specific to cyber insurance, is, you know, really last September 2021, we started to see carriers not underwrite business if they couldn't attest to or show that they had multi-factor authentication. So that's one of the first things that you can do. And again, it protects. It uses a statistic, Jason, of 99%. I've seen it as, you know, as low as 80%, but certainly can stop a lot of the issues that we get into from the outside bad actors that are out there. Maybe an insurer's risk appetite diminishes, or there's changes from a regulatory standpoint. So an example of that would be flood insurance, maybe earthquake in some instances, where it just becomes so expensive that individual insurers, you know, need to look at moving that to more of a write your own type of flood insurance environment. So sometimes insurers, their risk appetite diminishes, and then other markets are created for that, and hence premium rates may become less competitive among insurers. So there's not as much choice, and because sometimes insurers enter and exit markets based upon profit and loss. So those are some trends that we're currently seeing across the insurance market. And what drives that? Okay, there can be the economic uncertainty, financial market volatility. I mentioned increase in claim activity, or global events. And I think for everybody out there, we can at least look to financial markets, economic uncertainty, and global events. And that could be a whole nother webcast. So I'm going to just leave it at that. So when we think about then drill into the cyber market itself, what are some of the questions I have for our partners, my good partners at Lockton Companies, the Crane Agency, who I speak with on a regular basis about this, and they have some expertise as well in-house. And we talk about, well, what's happening here? What are we seeing in the cyber insurance market? If all of these numbers we read about, we know that JP Morgan came out and said they spend $800 million a year alone on their cyber program. Okay, now, they're a $1 trillion company from the standpoint of market value. They're billions in revenue, net revenue. So, to say that's a lot or that's not a lot, the fact is it's $800 million, and they have a heavy focus on that because you can imagine the banking industry is a target, just like manufacturers and healthcare. So those are some of the three big areas where people are at risk. Because why? Jason mentioned it as well. People are looking to get into these types of businesses and then follow, the supply chain. That's kind of the newest trend, is following that supply chain. And how can we get that information, or how can we close a business down and ask them for money to get back up and running? Okay, so what we're seeing here is, rates are increasing. Again, a function of a hardening market. I mentioned manufacturers and technology companies right now seem to be the hardest hit. We may see some reduction in limits in policies, and we're seeing some of that in the cyber insurance market. There may be reduced ransomware limits or additional requirements to be verified that you've put into place to help limit or protect against the additional ransomware. Everything from, are you educating your employees, to additional protocols and some of the things that Jason and Julie would put in to help protect you, or that your IT professionals at the office will have in place. And last but not least, heavy demand. And yes, as you can imagine, there certainly is heavy demand in the cyber insurance. It's something that we're now hearing about every day with the unfortunate things that are unfolding over with Russia and Ukraine. We've seen a lot of headlines out there about cyber and some of the attacks, and be on the lookout. So we're getting hit with that each day. A little headline risk also can begin to create some heavy demand. So, what's that mean for you and I? What does that mean when I'm talking with a client about, gosh, can we even get insurance? Absolutely, we can still get insurance. So when working with a client, we want to identify a couple things. And we want to make sure that whether you have a program in place or not, that we focus on, some key things about the insurance. And are those coverages either currently available or not? And I've got a list here on the next slide that I look for, and that I usually talk with folks about. And these are important. I pulled a lot of this information down from the Federal Trade Commission in connection with the National Association of Insurance Commissioners. But when we really think about your current insurance program, and you have a current cyber policy in place, some of the things that I'm working with clients on, working with Julie and Jason on, is to identify what's the extent of the coverage that you have. Certainly, you've heard this before. If you have a loss, you certainly don't want to find out where those gaps are after you've experienced it. And Jason gave some pretty good examples of that, and we found a few gaps here and there. So let's just kind of run through these policy coverage requirements. Okay, so we know that there are changes in the marketplace. Insurance companies continue to become more sophisticated. They get better actuarial data as these types of coverages become more prevalent. There will be people that are strong and have deep resources in the marketplace, and we want to make sure the policies then are written to cover the things that really can create problems, whether you're a small or mid-sized business or a large, multinational company. Probably some of the most underreported incidences are in small and medium-sized businesses. And we don't hear a lot about that because they certainly don't make the news. But that's really what we're seeing. The average loss is $133,000. And Jason, your numbers on your slide come pretty close to that. Okay, you can see these losses, and those are costs too. The time involved from your employees, downtime. There's a lot of things that, you know, that aren't always calculated beyond that. So, you know, the data breaches. Okay, theft of personal information. What's the coverage look like if there's a data breach? Cyber attacks on data that's held by vendors, okay, and other third parties. I received an email, I think last week, from a website that hosts an online newspaper that we subscribe to, and it came out a few days later that they had to send out an email to everybody to say, hey, this is what happened, and they reassured everyone there wasn't a breach of personal information. But up until the point that email came out, it was my fault that it wasn't working, because I'm the IT professional at my house. So my wife wasn't happy. She couldn't read the paper, and that was somehow my fault. But fortunately, I reassured her that none of our information was compromised during that breach. But that's a good example of third party or information being held by an outside vendor. Okay, cyber attacks on your network. Cyber attacks that occur worldwide. If you travel and you have breaches of your network, do you have that type of coverage for your employees if they do travel overseas? Okay. Now, something that is becoming more prevalent is, do you have coverage that defends you in a lawsuit or a regulatory investigation if you are overseen by different state and federal regulatory agencies? So another layer potentially of concern, because as Jason mentioned, different states have different reporting requirements. I know that Illinois, Missouri, it's almost, I'm paraphrasing, but you know, I read the statutes, and it really comes down to, if you think if there's been an impact with, you know, client or personal data, you've got to report it as soon as possible, is basically how it reads. Okay, so that's something that creates, again, some more risk potentially with your clients, because they get concerned. And then a breach hotline. And does your company, does your policy allow for coverage, or at least people that you can get hold of 24/7 in order to help handle these losses, help contain them, help walk you through everything from dealing with, you know, the threats in a ransomware, where they're interacting directly with the folks that have actually taken the information or holding it hostage, if you will, to a number of the other types of public relations and some of the things that they're professionals, they can help you get ahead of. There's a cost for that to help contain some of that. And in essence, the idea is to separate, you know, what are the facts around that loss and who's impacted versus some of the rumors. The larger the company, obviously the bigger concern. So these are the types of policy coverage requirements that I look for. It's certainly easy if you don't have the coverage, then we know you don't have any of them, because again, normally your property and casualty, your general liability, your directors and officers, they don't generally cover this, and if they do, it's a very small amount. It's limited in there, and we've seen them as low as 10,000, and generally, as you know, that's just not going to be enough depending upon the situation. So these policy coverages become tantamount to really, what are we looking for and why, and then how do we underwrite around that? Okay, so I talked a little bit now about first and third party. In the 1990s, it was very limited in coverage. You know, the insurance business is constantly, it's revolutionary. It's not revolutionary, it's more, you know, evolutionary. It continues to grow. Companies become more sophisticated. They add coverage. They can rate for it. You know, the actuaries put pen to paper and figure out losses and risks and premiums to those to help you transfer that risk to them for a premium. Okay, so I'll just run through the first party and third party and just kind of add maybe just a little extra couple comments on some of these. So the first party coverage generally protects you as a first party, your data, your employee and customer information. Any sort of legal counsel determined notification or regulatory obligations. I mentioned briefly, Missouri and Illinois do have those statutes if there is a breach and what you're required to do. Customer and call center services. So again, depending upon the size and the scope, you know, there are costs if you have to engage a call center or you have to turn one of your call centers into a breach hotline to answer questions. There's costs for that. Again, crisis management and public relations. Forensic service to investigate the breach. Again, the average time it takes for some of these breaches to be realized is 7 months. So there has to be some work to look back into the time that it happened and how it happened so that you can understand how to fix that. So that time is money. The recovery and replacement of that data that might have been stolen, any lost income due to business interruption. And I think this is one of the coverages that's most widely overlooked or it's misunderstood, not only in your property and casualty coverage for your business, but also when it comes to cyber insurance. So even if you think you don't need cyber insurance or you don't need a strong protocol to protect your information, it simply could be if something were to happen from some malware, from somebody clicking on a link that maybe they shouldn't have, and you're closed down, and you don't have to pay a ransom, you're just shut down. There's a cost to that business interruption. It can be costly. You still have to pay rent. You still have to pay your employees, and you don't want to be put out of business for that reason. So how does that first party coverage work? Well, it's protecting you, and that's exactly what business interruption insurance will do. Any sort of extortion or fraud, and then again, I've mentioned it, any sort of regulatory responsibilities that you have. Now, third party is who? Well, it's the other person, right? So if someone brings claims against you for a loss, and that's pretty important, we carry that on our car. We have our first party coverage, right? We have our collision, we have our comprehensive, but we also have liability if we have an accident and hit someone else. That's third party coverage, covers the other person. So it protects against liability from third party claims, someone other than yourself. Payments to consumers affected by the breach. I got 2 years worth of services from Equifax and monitoring, and that was a cost, but not to me because I was affected by that breach. Any additional claims and settlement expenses, defamation, copyrights, trademark infringements, litigation, settlements for damages, and any costs additionally for accounting. So now I know it's a beautiful sunshiny day and this topic isn't necessarily matching up with the weather outside, but I think it's important to understand a couple things, the trends in the marketplace, making sure that if you want to seek coverage, that we have a conversation around how are you currently set up, what are the coverages I need to look at, and I hear a lot about this first and third party coverage. So I wanted to give you an overview on the most important things in the insurance market today and some of the conversations that I have with clients when we entered into this conversation. So we can move on to the next slide.
Hey, Chris, before we move on, there is one question that I think goes with your first party coverage greatly. Does the cyber insurance policy cover a ransomware payment?
Up to a liability limit, yeah, generally it will. That's what it's there for.
Perfect.
Okay. And again, that cyber extortion and fraud, that's a great question, and it's certainly one when you're looking at different policies, and it's certainly something that we want to make sure that we understand the extent of and the limits. So that comes into play when we're looking at those coverages, particularly first party. How am I protected? Okay. Great question. Thank you. Next steps. Well, what I would encourage everyone out there to do is dust off your insurance and your security and technology policies and programs internally and see if they need to be updated. Again, I mentioned the insurance coverage is more revolutionary and it evolves slowly over time. Okay. Then I would suggest maybe reaching out to a professional. That could be Jason or Julie or myself, so we can take a quick look at the assessment of your current insurance and some of the other things that you've uncovered that you may have questions around. And then at that point, you'll be in a better position to contact your current relationship insurance carrier to add, or you can talk with us about suggestions for replacing, and that's where I can bring in the trusted folks that I work with in the marketplace to help secure this protection for clients. So I want to thank you again for your time. I know this was pretty quick. There's a ton of information out there, so I'm available, just like my teammates, to answer any questions. But Julie, I'm going to go ahead and turn it back to you. Have a great day, everybody.
Sure. So Chris, there is a follow-up question. Can you go into the protect data, like employee and customer information? When you say the cyber insurance protects you, can you elaborate on that word protect?
Well, all insurance is designed to protect you from a loss or to put you back to where you were before. So, if you realize you've been breached and you're able to work with your carrier to determine the dollar amount of the loss, and that's time. That could be some goodwill, and that can just be billable hours to recreate or even get some of that loss restored. And that's if you've been breached and had a loss. So that loss could be just in terms of business interruption too, right? So it protects you against that downtime. Now, if we move to third party, simply it's the costs associated then with really looking at, are there other settlements and damages and judgments? How are people harmed, and are they able to show that they were damaged in some way? So that could be identity theft, things of that nature. So the first and the third party coverages, I suggest you have policies that cover both, particularly if you are in certain industries, healthcare, financial. Those are the types of areas that you want to look at. So, I mean, the word protect's pretty broad, but it's a better word than reimburse, because on the first hand, you want to make sure you have the protocols in place to actually protect you from a breach event. But in the case that something happens, then you have the insurance to make sure that your monetary loss is covered up to the limits of the policy. I hope that helps.
Yes, that helps. Great. I have one more question, and Jason, I'm going to direct this question to you. When you and I are meeting with clients, sometimes we are faced with the clients who are questionable on how much insurance that they're spending and what it's worth and the value, and looking at their own entire data network and then coming to us and saying, my data is not even worth what the cybersecurity insurance policy is going to cost me. Can you explain to the group of why that insurance is worth it, and how it includes not only the data, but everything else it includes in the environment?
Yeah, that's a great question. It is one that comes up often, that my data is not worth anything. Well, I encourage you to go out to those calculators, because one, it's going to tell you that even if you don't lose any records, or perhaps it isn't worth anything, there's still a cost to an incident. That it may be a little, or it may be a lot. That calculator is going to help determine what a little and a lot is. Then on other occasions, clients have said that, who actually have already been hacked, and said, none of this data was worth anything. But then as soon as the hacker says, we're going to broadcast this to the world, they're like, oh, we're rethinking that now. That's worth something. And it's not always, it's not always like a record, like maybe a social security number or something. Maybe just content that they don't want out there, the public to see, that makes them like reconsider paying the ransom. Those are a couple things that I would share. But also I'll share, and I think it's safe to do this in the two examples, for the organizations that were that did have a ransomware attack. They subsequently went out and got coverage. And I think for $1 million insurance policy, it was somewhere between $400 and $500 a month. Now, I think you have to take a lot of things into consideration when you're throwing out costs of insurance. Like, how much are you locking down your environment? What have you did to make sure that everything's safe? There's going to be factors in there that go along with that to maybe help decide to go ahead and get insurance instead of just immediately claiming that, hey, my data is not worth anything. Because I think the majority of the time it very, very much is worth something.
Very good. So at this time, there's no more questions. So I wanted to thank everybody for joining us today. I hope you found our webinar valuable. If you are feeling overwhelmed by the amount of outside threats you need to deal with while running your business, you're not alone. And we are here to help you navigate this. And would like to offer all attendees a 2-hour consultation around your cybersecurity initiatives or concerns. This consultation include analysis of your MFA settings. Jason brought up that that's number 1 for an attestation. So if you have concerns of, do I have MFA on all my employees? Do I have my settings correct? We could easily take a look at that and give you a benchmark. The dark web scan that Jason referenced, that is another thing that we could run to see how vulnerable you might be or your employees might be. So please reach out to one of us or follow up with marketing if you would be interested in having a more one-on-one discussion around these topics.
Yep.
Okay, so at this time, thank you everyone and have a good afternoon.
Thank you.